The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be on Monday through Friday on market days, 11 o'clock till noon Eastern. And of course, I follow Steve Rhodes' 2 hours of great programming. We have a fabulous program all the way through today, right up until 6 when Tom O'Brien, 4 o'clock till 6, wraps it up. And remember yesterday I was speaking about cusping. I'm looking at this, and I'm going to go through a number of charts right now, and I'll just run the numbers first because that's always important. Just get out the way for this 29th day of May. Dow's 9 at 16,643. I'm still expecting new highs at 16,736 at some point in the next few days. The S&P's up 3.5 at 1913. The comp index is up 12 at 40.37, and gold is down 8 at 9. Gold is down 1.5 at 12.58. Read the wrong. Silver's down 0.01 at 1904. Platinum's up 6 at 14.59. High grade copper is unch at 318, and crude oil is in the 103 area, with bonds up 9.30 seconds at 138.30. The euro is up just a fraction, but the dollar is down 18 cents at 80.43. So this is what I want to discuss. You see the E-minis right here, this rectangle formation. Let me just squeeze this and now open it up. I'll open it up. This rectangle formation that's formed in the E-mini from that peak E-top at 1914 round number high that was made at 8 o'clock in the morning on the 28th. That rectangle can last a lot longer than your patience, at least for now. This is a leg D, possibly a peak D, and the E-minis are, because they're in leg D, with the stochastic at 94%, which is very good, and the MACD still expanding, is suggesting to me that having just nicked the up channel inside track resistance line, that there's a chance now that we could go higher into next week. It also says I'm raising the base on the chart to 1896 with a 9-period exponential moving averages, and so far this is still very positive action. Just real quickly, I want to do something. Look, here's the 2-minute chart, same process. Look for the most identifiable low bar. In this case, let's go to the 8:32 time period this morning, 1908.75, and then there's a spike. A, B, C, D. What you expect in the Chapman wave methodology is at least a D in a buy mode, but it can go higher, and certainly it does. Goes E at 1930.75, and then it pulls back very sharply, undercuts low in that 1908.75 area. And where does it go to? It goes to a low of 1907.25. I'm suspecting that we will go to a D in the next couple of minutes above 1912, and then we're going to get a test of strength again. If you look at the this is just teaching the methodology of the Chapman wave. If you're looking at, let me just get to this here. Let me just move this chart away. I want to show something else. In the 300-minute chart, I was asked about that of the NQs. That's the E-mini NASDAQ 100 June contract. The question is, where are we? And the answer is a peak E with a down arrow because the MACD and stochastic turned down, but it's holding a 9-period moving average. This rectangle formation started yesterday and it can go on a little bit longer before it breaks out either to the upside or the downside. Parameters to watch on the NQM is 37.30.25. And right now we're at 37.24.75 to about 5 points higher and that would represent some kind of a breakout if it holds there. And on the downside, you've got 37.0750. So that's the 300, that's the 5-hour chart of the NQs. Now, what's really interesting for me is I'm going to get rid of this just for the moment here. Don't need it right now. So let's just take that away and move it down right there. Now, that's the 1 minute. Give me a second here. And there's the 5 minute. Just want to show the 5 minute as well. 5 minute made a peak D. So when you're looking at the relationships of smaller time frames to bigger time frames, what we're looking at is the 5 minute went to peak A, B, C, and D. That's what you expect. And look, the MACD turned down, stochastic turned down, plop, it goes from that 1375 level down to the 1907s, and now it's having a nice bounce back. Now, I'm suspecting, now let's get to why I'm talking about aspect. When we're looking at the different chart formations, and now I do want to get back that 120-minute chart if I can find it right there. So I'm just going to put it there quietly. Look at this. Here's the Dow, INDU. The Dow is at a peak D in the 120-minute chart, and it's taking a little rest period right now. In the daily chart, peak E, and it hasn't gone back above that to the 16,736 level. I'm suspecting it's going to do that in the pattern. It completed the Chapman wave leg, body, neck, head, beak of the Chapman stork leg formation. And as you know, I always say when that completes, there's always a powerful move to the upside, and then you're on your own. It's like you can take a single leg, and then from that moment on, you've got to find other chart patterns. But that's the methodology, that it makes the beak formation, that is, and that concludes, and then it goes back into the body or slightly above the body. Very important information to know. But it's the weekly chart that is so important right now. I want to see 16,735, 36, because I want that D. I want to know that the weekly chart has been a little easier for me, that I understand the D, and then I can start looking for some kind of a sell signal. I also want to know that in June, whether or not it's next week, if it's next week and the new high, that extends leg E in the monthly. When I'm in E, I've got to be somewhat careful, because that's where you can get turn downs, and the same with D or E in the weekly chart. So now let's put this together with the S&P. SPX, explain why I'm looking at what I'm looking at. So the S&P has recycled, and it's gone to a very clear A, B, C, D. It turns out, well, I was worried for nothing, because there is, in fact, now a leg E in the weekly chart. It's just amazing how this, it just, I don't even know what to say, how often it just unfolds that way. And that's the methodology in the Chapman wave. If you want to know more about it, my book, CD book called Introducing the Chapman Wave Methodology, discusses these different things, as well as time frames, as well as learning how the daily can lead to the weekly can lead to the monthly, etc. Now, what we're looking at is there's the resistance in the S&P. Right there, we're at resistance in leg D. But the stochastic is at 94%. That is really good if it maintains the 90% here through next week. We're going to be going higher. And then you introduce yourself to what? The weekly chart up channel. And that says the S&P can go all the way into the 1931. It's at 1914 right now. 1931 and higher area, because that's that inside track repellent zone. I'm suspecting that it won't go much higher than the 1927, 1931 area at this particular time. I'm watching next week very closely. Here we go. The New York Exchange, NYA.X. Look at this. Leg D. We waited and waited. Now you've got the leg D. I even drew the pattern in with a rising W formation. And now you're heading towards the resistance area. And that resistance area is actually a little bit lower now because of that peak C. That intimates to you that that whole area where we are within about 10,753. Right now, the New York Stock Exchange is at 10,724. And it's in leg, this could be a brand new B, but I've got it as a potential leg F in the F/B in the daily. So you can see that there's a whole bunch of things going on. But so those are the indexes. But wait a minute. So big deal indexes. What about bonds? What about the TLT? Well, lo and behold, leg D is extended. It's just poking its head above resistance. The stochastics are 74%, 180. And this MACD is making this bounce between positive and negative every 4 or 5 days. And this is the positive aspect. But it is an E in the weekly chart in the TLT 20 Lehman T-bond. And now look at this. USM 14 is in leg F/B. I'm going to the continuous contract because it gives you really a much better picture. Look at that. That black line, if you're looking at Tiger TV, that black line represents tremendous support that it hasn't closed below since it broke out. The TLT broke out back in January, the week of the 10th of January. So right now we're looking at the MACD strong, stochastic strong, the unbalanced volumes just whipping around like this has made a very quick A to B to C to D. It's in leg D right now. And that says that invariably you're going to get some kind of a pullback. And that it doesn't say top, it just says a pullback. And the pullback makes the 138.5, it makes the 135s very strong support initially. And you haven't yet broken out in bonds that very long-term trend line resistance at 140. But you have broken out of the TLT. Look at this. But the month is not finished. It only finishes tomorrow at 4. So if we close below 114 tomorrow, it goes back underneath that line. If it closes above 115.25, you're for the first time since you broke down and created the second lower high bar peak to start this trend line, which goes back to May of 2013. That's a year ago. We've trying to make a U-turn. We've made one U-turn in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months from the high, all-time high in July of 2012. And now we've gone 12 months. You've gone 12 months and you're trying to break that trend line. So this is going to be and the MACD, if there's a strong move tomorrow in bonds, then that MACD will, for the first time, kiss or even cross positive in the monthly chart. That'll be amazing. So I need to look at that, and I want to look at the dollar, and then we'll take calls. Dollar is right now down 15 cents. It has made a peak. It will make a peak E if today, and it doesn't look like it's going to be able to do that if it doesn't go above 80.58. Testing the 200-period exponential moving average. That's all we're looking at now in the dollar. Once it goes above, it's done it before, it comes back and does some retesting. If it only retests to 80.29 and then starts another move to the upside next week, that's going to be really positive. And the MACD is good, and stochastics at 92%. Dollar's acting pretty well. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dollars up for.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, just to quickly update here, so the 2-minute chart made that peak D that we were discussing. It just hit 1912.75. So remember, the objective in the Chapman methodology is to get you to at least D in whatever time frame you're looking at. And in this particular instance, that concludes it. So if you were to take profits right now, it would be fine if you were in it. The 5-minute chart says that it's in C. Everything there is technically good, and it should also go to a D, and that means that it should take in the next few minutes, in next 3 to 5 minutes, it should try to break into the 1913 area. So we'll see. But one thing at a time, I just want to show you how this unfolds. I had so many questions about the Chapman wave methodology. So now what I want you to do is just put back the 120-minute chart here. Let me just space to the right. Don't want such a long space. Okay. So, and as I do that, I had a question about YNDX. I'm going to do that just very quickly. YNDX, Yandex NV Class A, share trading at 31.96, up 6 cents. Went short. This person went short, and I'm saying, hey, hold on. I've only got a peak C. There is the chance that you could use a phantom peak because it did it twice, and that would be the high of 27.00 on the 30th, and then on the 1st of May it went to 27.00, and the next day it went to 27.07 for a breakout. So that could be a phantom peak, and that says, yeah, this is where you'd expect. But look at the MACD. The MACD is still very strong. Stochastics 93%. I would say this, that I'm expecting that the 200-period moving average, you didn't look at that, at 32.79 is too much of a magnet, that if you're short, it's just a real quick short as a pullback. And then I suspect there'll be a pop-up above 32.79, and that's going to say that would be leg D, if it happens, say, tomorrow, not today. And then what will happen is, at some point, it's going to come quickly back to the 3270s to test the 200-period moving average, and then it might go a little bit lower. So I'm suspecting this is not really the short that you want. If you're making some money right now, I'd probably say, you know what, take that money right now, take it off, or make it real tight, make it 32.55 or something as a buy stop. It's just too much strength right now. And if you're looking at the 120-minute chart, let me squeeze this. Yeah, I can see that was a good move for the 120-minute chart. That's the very short term. But it could make a rectangle formation and dip down to 30.88. Hey, that'll be a nice short for a quick trade. But I'm suspecting it's just stuck in a narrower range with today's low of 31.41, maybe 31.37. And on the downside and the upside, maybe 32.42 for another day or two. So that's just my opinion. Now, I wanted to show you the IYT. We'll go to the IYR in a minute, the REITs. See, the IYT is extended vertically now with a very high volume bar yesterday, gone a little higher today. And what it's saying to me is that the weekly chart has broken the resistance point in leg D. The monthly transportation iShares Dow Jones Transportation Average Index Fund, the IYT, which is 144.78, up 7 cents now, is in fact extended in the monthly chart, but I haven't got a signal yet. I'm real close to a signal, but that can unfold. It's a monthly chart. It can take 2 months to unfold. Meanwhile, the weekly chart says this is the one to watch. There are two signals that are saying, be really careful, because if there's a reversal to the downside and 142 is taken out in the next 3 to 5 sessions, that'll be a signal to say we've made a pretty decent short-term top. If, in fact, you only pull back to 143.50, 142.50, and then hold steady, that says that the weekly chart still has internal strength because it's in leg D just above some kind, let me just draw, this is the next line here of resistance. It's right at the outside trend of the inside track resistance. If it breaks above that, that's quite positive. If it holds within that, that's quite negative. So there it is. Makes it very clear. As I say, the daily chart is broken. When a rising wedge is not broken to the downside to make that U pattern with a retest, but in fact breaks above, that's very positive. So that's why it's gone from the 142.5 area to the 145.32 high today. I suspect that we're real close to at least some kind of a pullback in the IYT. Now, if you put it together, so I'm saying if the dollar DXY, is about, I've got another break coming up. And we'll talk about why I'm looking at possible inflection, deflection areas coming up, with the Dow possibly just making a modest new high next weekend, and maybe the pullback starts. I'll explain it all when we get back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back. Dow's up 20, S&P's up 5. Nice. I love this slow grind to the upside. Just without bad news and without the volatility index screaming higher. It's at 11.64 right now. This rectangle formation is just taking a nice breather before we at least attempt that all-time high. Just Wuba is questioning the den, 58.com Inc. I have no idea what they do. The daily says if you're long, you're not long yet. Well, you know what? I'm going to suggest this at 41.41. I would have recommended just a little lower down at 41.20 something that you could nibble on it. So now you can nibble but less. China Craigslist. Okay, I'm going to suggest that you do it. The chart is improving now. It had an H to an M pattern. I'm going to suggest that you can just nibble right here. I'd put a fairly tight stop. I would start to increase my holdings if you're going at 41.41 with say, I'll put in a 40-cent stop, a 1% stop. Okay, 1% is no big deal. What I would do is I would start to add to it if it can close above 42.01. In fact, if it gets to 42.02, I would then add another 42.02. I'd add another small position and make my stop a fixed stop on the entry price on the first entry, and the second one has a you can use a sliding. Well, I would just put it in as a 50-cent stop and it's a trading stop, and as it moves up 50 cents, it keeps moving with it. That's the best way to do it, because the weekly is improving, but we have to wait for Friday, and the daily looks good. Let's go to our first caller, Ben in Tallahassee. Hi, Ben. How are you?
Excellent, Basil. How are you doing?
Very well, thank you.
Hey, very short term, do you see the it looks like you have the VIX 120-minute chart in a trough E? Is that correct?
I just the VIX. Let me just do that again. I did this for someone this morning. Let me see if I've got it. Yeah, trough E. Yeah, very good. Trough E, and trying to form a little base, making a rectangle formation here. But the flat stochastic is an issue. But you know that the VIX index is the one that moves. How can I put it?
It could sit in that floor forever, right?
Yeah, but once it gets to this low register, I did a chunk of work last night. Gee, did I lose that work that I did last night? I don't believe. No. Everything is. I can't remember what I did. I know I spent ages on it.
But what I seem to find is that it tends to start taking off before. It almost seems like it's a leading indicator. It almost seems like it always seems to take off slightly before, a few days before the market.
That's a very good point. Let me just qualify what you just said, because it's a little more complicated than that.
Even with the market continue to go up, it starts to go up just before it seems like the market would come down. If that makes sense?
Except for one little thing, and that one little thing is that it often just has a pop-up. What the difference is that it moves up and doesn't pull back for a day or two. That's the clue. If it doesn't give back gains and it starts to hold the gains, invariably that's the clue to say, hey, watch out, we're about to get some kind of a turn in the market. Yeah. So I wanted to just qualify, because it often has a pop-up. It's what happens after that, if it's able to do it. Yes, I did a lot of work on the volatility index, the VXO, which is based on, I believe, on the Dow. And this one shows in the monthly chart that there's an arch formation that's forming, and that we can have very easy clues to say that there is a trend change of significance in the Dow. I don't have anything yet to say that's happening, other than just as Ben was saying, here we are close to making new highs in the different indices, and look very quietly, you've made higher lows in the volatility index weekly. No one ever talks about the VXO, but this is a very important one. I think I saw it, but I didn't hear it. I believe I saw Darryl Martin showing different volatility indexes last night. I actually hadn't seen some of them. So once I saw that, and then I look up, and not only has Kramer had a whole section on his show on the VIX index, someone else yesterday on CNBC was doing. So now that it's the focus, it says to me, we're probably going to have a bit of a fooler here. Too many people are now looking at the VIX index, and I suspect that we either have a bounce, and I'm looking at those weekly charts, and a couple of the weekly charts suggest that we might make a top. We might make a top next week, but there is a chance that the weekly is still holding well enough that it makes a secondary top in June, and then we come down. I'm not sure about that, but when I see this many people, and somehow my eye picks up something that nobody ever talks about, or hardly anybody talks about, they often mention on the different shows, but they only mention it in terms of the fantastic oversold area that the VIX has been in, not realizing that for those of us who have followed the volatility index for not just years but decades, you're talking about a VIX index that can remain low for a very long time, just as it did in 2005. Remember the whole period of 2005? It was down in the 9s and 10s. It just never got out. Very seldom did it get out of that.
Yeah, that's a tricky one.
Well, it's a tricky one, but it's a fantastic one. Our subscribers did very nicely in it in that last big sell-off, but we also didn't get out in time because it moved so quickly to really get the very best of the of that particular index.
I guess my ultimate question is the 120-minute might be too microscopic to even make a trade on. Maybe you almost have to stick with the daily, the weekly to make a decision.
You know, the big problem with this is that you need a spiral to the upside to really be making money, because if it just does something small, any trading vehicle that you have, whether it's the TVIX, the UVXY, any of those things, VXX, it just shrinks within 2 days. Right. If it hasn't moved, you see yourself, I mean, it's already down. The TVIX is down from where we were in the last attempt was TVIX was in the 7s, and now it's trading at 4.20. That is 33% decline, and the market hasn't moved up 33%. So what I'm looking at here is, fives as well. In the fives, it's gone down to the 420. So what I'm looking at here is, when you are using the VIX, it's best. I know people say that you miss the best move if you aren't in it when it starts to move. But if your timing and you're watching it is really good, you can get it when it's off the bottom rather than keep buying it at the bottom when it's going lower and lower. Right. So I'm going to make the suggestion that the VIX index at 11.71 by Tuesday or Wednesday of next week, if it's at 11.30 or lower, this market's going higher. Mm-hmm. And if it is in the 1220 to 1290 area or higher, mm-hmm. we've made some kind of a short-term top. That's the best way I can actually discuss it. Now, you have a question, I think, on the XIV, right?
Well, actually, it was a lead-in to my bigger question, and that's, is your bias more or less on the fence still as far as market direction over the next few months as to an instant restart versus correction?
That is a great question. I'm going to answer it in two ways because it's going to be price that tells me. If the first way is real simple for me. Volatility index, if it starts to climb in June into the high teens, then we've made a more intermediate term top, because my monthly charts are going to be all at D's, E's, and F's. And boy, you start to pull back. Dow goes under 10,000. To be safe, I would have said 16,100. I'm going to say daily close under 16,000, and we're in some significant decline. On the upside, a close above 16,790 into the 16,820 area, and I have to say, whoa, that's really good action.
Do you think that would really be a instant restart territory? Is right around the 16.8s?
I'm not talking monthly. Each month I have to wait. So I'm going to hold off talking about the monthly for now, because if it continues up in the same leg, there's nothing I can do. I just can say it's still in D or still in E or still in F. Right, but I just wonder, it's a really good question, and that was my first part. It's just the simplest way to do it. Here's the more complex thing. I'm looking at the XIV, which is the VS Inverse VIX short-term trading index, volatility index. I've got it in leg E. I've got the on-balance volume about to turn down. I've got the relative strength in an overbought area. I've got the stochastic flat at 97%, which is very bullish, and it means it can go higher, and the MACD hasn't given a signal. So when I try to make it as simple as possible, I've got leg E in the monthly, and I don't know whether this is a brand new B or an old E in the weekly chart. So to make it as easy as possible, all I can say is that if the XIV starts to break down and then closes, it's at 38.85. Any point it closes under the last trough of 34.22, I have to consider that we're in at least an intermediate term sell mode in weekly charts. I'm pretty sure that would be the case. And then I can really start studying the monthly charts. But I don't want to be ahead of the go. The second part of it, that's part of the second part of my thesis here. But the QQQ series, that's the momentum stocks. if it breaks decisively at 91.05, if the Qs break decisively, I was going to say 92.50 to be safe. I'm going to make it a little higher because if it's going to break out, higher is what you want to see. I'm going to say above 90, a close, any weekly chart, close above 93. And I have to consider that there's still internal strength and that the low that was made recently on May the 11th, April the 15th, sorry, on April the 15th, was in fact a rotational correction low, a low that is an intermediate term rather than a short-term bounce, but an intermediate term low, and that I have to include the IBB here, and that if the IBB, which is the biotech sector, is able not to stop at 240 or 245, but to actually power into the 250s, that's going to say this internal strength, and the rotation says we could start to see cyclicals and the steels and stocks like that really pull back. While in fact, once again, you've got the rotation and the momentum stocks continue up, and they continue the move to balance in the scales of justice. On the one side, you got something weak and you got something positive. So that's the best way I can do it now. My thinking, looking at the charts, the monthly charts, I get very nervous because we are so close to some kind of a pretty good intermediate term top, and yet there is the chance we could recycle because we've never been in this situation before. We really have never been in this situation because the Fed is there bumping money. Hope that helps you.
Good. Thanks, Basil.
Thank you, Ben. Let's go to Sean in Hudson, New Hampshire. Sean, how are you?
I'm doing pretty good, Basil. How are you?
I'm well, thank you.
Hey, I'm looking at Simon Property Group. I mean, I'm short it, and obviously it looks good today, but it also had a spin-off. So I'm just trying to get your feelings on this thing.
SPG. Why is that not coming up on my? Okay, I got the IYR, which is holding well, and this is SPG's part of it. Try it again. SPG. No historical. Did they stop trading or something on this? When I looked before.
It's trading.
Why am I not getting it?
It's down. Trading. It's trade. Hold on a second. It is trading. I'm looking at options right now.
Beautiful.
It's trading at 165.21.
I must be able to show this chart because I had this as I showed it just recently for my subscribers.
And that's why I bought it after that. Actually, I get your newsletter.
Oh, okay. So that's when you shorted it. Great. So it went up just a little bit more. And then what happened is it made, why am I not showing this symbol? It's just trying to, don't do that to me. Let me go to the IYR just for a moment, and then what I will do is I'll have to find another service here just to be able to get that chart. Oh, I know what to do. Give me 1 second. I'll be right back. Where is it? Right back here. Okay, so what we're looking at while I'm busy finding a way to get the, I need to do this very quickly. Okay, I know what to do. I'm going to get it as we're talking. Tell me your thinking.
Okay, well, I shorted it up in the 174s.
Okay.
And so I hear the music.
Yep, I hear the music as well. That'll give me a chance to get the chart up. You got a good question. We've got Joseph waiting on the line to talk about rocket ship terminology. And Joe, I got a lot to do here, but I must find the chart, and we're going to talk about SPG Simon Property, which tanked after making a beautiful top just recently. I'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. So SPG right now is trading at about 165.15. So I had a quick question. Someone in the den said something about on SPG, if you are short, are you obligated to deliver the spin-off? So I'm not even sure what that means. Is there, because I can't get it, so something's happened to the symbol. I was able to get in a different program. So do you know anything about it, Ben? Sean?
I'm short Simon, and in my account today, I'm also short the spin-off.
And the spin. Has it changed its name from Simon SPG to something symbol?
No, there's Simon Property Group and there's WPG.
Okay.
So I got both of them. I'm short both of them. They gave my account instead of me getting shares to own. I got shares I'm short, and they're both down. So it's like hitting the lottery.
You know what I'm going to suggest? Take something off right now to reward yourself, because that kind of gain is really, spectacular. So take some off and then leave some on, and even on the one that you leave, because there could be something going on here that all of a sudden it corrects and things change. So this is not like there was a bad earnings report and it collapsed. This is something different. So I'm going to, I usually don't do this, but I'm going to suggest that you take something substantial off on each one.
I can do that.
And and then you can find out what's going. I'd rather do that because you can see that it's already trying to bounce. I wouldn't like to give up those options gains. They're fantastic gains. One of two things. You can either take half off of each, or you can say,
I'm actually short the stock. I was looking at the options, but I'm short.
Oh, you didn't do the options. Okay, if you're short the stock, that's a little different. I would then take something off to reward yourself, and then I would put a tight stop on another portion of that, and then keep it as a core because it could be a problem. But just in case it starts a big rebound, because it's not an earnings report that's bad, I would take a nice chunk off right now to reward yourself. Hey, congratulations. That's fantastic.
Hey, and if you have a chance, if you could talk about copper specifically, it's an ETN, lightly traded. I know you might have other calls. But
I do. What is it? Okay, you know what? If I don't do it today, I will definitely do it tomorrow because I wanted to do copper and a whole bunch today, but I've run out of time. So thanks for calling, Sean. Let's go to Joseph in Fort Collins. Hey, Joseph, how are you?
Self?
Hi, how are you?
I'm well, sir, and yourself?
Very well, thank you.
Good. A couple of 3 years ago, we spoke about a term you have for one of your patterns called a rocket ship.
Yes.
Out of all of your terms, the Roman candle, the Eiffel Tower, the falling axe, etc., they're all very visual descriptions of each pattern. I mean, you just look at it and you see, makes sense. It's a Roman candle. But a rocket ship, you always sort of sound a little reluctant about it, and I agree. I mean, if you think about it, a rocket ship starts with its own energy from itself.
Right.
So I got another term I'd love to run by you and have you
I'd love
consider.
to hear it. You know what I'm going to do? I'm going to hear the term. I just wanted to tell Joe in Boulder who has the EUO, which we won't be able to get to. Joe, the EUO is in leg E right now. This is the double short, I believe. Pro shares ultra short, the euro. I would just watch two things. 1720, it's at 1731. 1720, if it closes under that, 1713 has to hold. It's in leg E, but I think it's going to try for 1745, which is the 200-period moving average. All right, Joseph, tell me about what terminology.
Okay, the new terminology is Costa Riff, R-I-F-F. Coaster comes from roller coaster. As you go up to an apex in a roller coaster, you hit the peak and you suddenly drop. You're gaining an enormous amount of energy.
Hey, wait a minute. You know what? I'm going to ask you to, can you call me tomorrow and we'll talk about it a little bit more? Because Friday's my technical Friday.
You got it.
Okay, I'll ask my engineer if he'll allow you on tomorrow. We don't usually have two in a row, but I'll ask you because I'd like to talk about this. So thank you for calling, Joseph. We'll talk. I don't know about that. I'm going to have to think about it. If you have to explain it, it's tough. I'll be back.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.